With the Fed's recent announcement of lowering the Fed funds rate, my phone continues to ring with questions with regards to how much money can I save and should I be refinancing now? However, there's a term and there's something else to consider besides just a lower mortgage payment, and it's called short term refinancing. So I'm here today to break that down for you. What's going on, y'all? My name is Kevin Weedmark, aka the Mortgage Mouth, coming to you with another critical strategic way to think about your mortgage, your largest asset, how to finance it, and how to help save you money. And something I wanted to talk to you about, like I said, is it's called short-term refinancing. So often I get calls, everyone asking, well, how much lower can my interest rate be? What would that payment be? How much can I save per month? But if you're looking at the overall cost of your loan, something you often need to consider is the interest that you're going to pay back. And one thing that you have to keep in mind is the longer term that you have, i.e., a 30-year compared to a 25, 20, or a 15-year fixed, you are going to pay significantly more in interest over the term of that loan. So if you're coming to me and you're asking me, hey, I bought a house a couple years ago and you got stuck in that range where you were in the sevens at that time, right now, you may want to consider short-term refinancing. And what that is, it's looking at a shorter term to pay back your loan, because not only could it potentially save you on your mortgage payment based on where interest rates are today, but it could also significantly save you money in regards to interest. So if I bring up this spreadsheet really quick, you can see the top one, it's a 30-year fixed. Let's assume somebody got a $400,000 loan. Their interest rate was 7% back in the day. Their payment is $2,662 per month, principal and interest. The interest on that they will pay back over 30 years is $558,000. That's a shitload of money. That's a lot of money for a $400,000 loan. You're paying an exorbitant amount of interest. So if somebody comes to me, and I've recently had this with a couple of clients, and they're asking me, hey, what should I do? Should I roll in my closing costs? Should I absorb it in the interest rate? This and that. We also want to look at this short-term refinancing, because what I did is I brought them their attention to, well, what if we looked at a 25-year fixed? And right now they own $396,000. The rate today they could have gotten was 6.25. That payment is $2,605 a month. For everyone out there, yeah, that's almost about $60 a month in savings. So they're already saving on a monthly basis. Again, cash flow could be something that's a very big concern to them. But the other thing it does, as you can see, is it brings the interest that they will pay back over the term of that loan from 558 to 387. That is a significant amount of money. You're talking $170,000 in interest over the term of that loan. That is crazy savings, significant savings. So you want to make sure that you're looking at all these options. I say it all the time. The mortgage professional you're dealing with, if all they're doing is quoting an interest rate, they're the wrong person. You need somebody that's going to be strategic, that's going to think outside the box, that's really going to help you understand all your options. In the end, knowing it's your decision, right? But giving you the options so that you clearly understand how to make the best financial decision at that given time with all the information spelled out on the table. And if we can lastly look at that 20-year fix, we can even see that drops, it's almost cut in half with regards to how much you're going to save. It drops the interest all the way to $271,000. Your payment goes up a little bit over $100 per month. You get a little bit better in that interest rate, but you can see the significant savings in interest over the term of that loan. So once again, my job is to be strategic. My job is to bring you the best options possible based on your current financial situation and your goals, not mine, yours, and present them to you so that you can make that great decision for yourself. And once again, I have to give the disclaimer. These are just numbers. This is no significant quote on interest rates. It's not direct to you. It's all going to depend on your credit score when we run it. It's all going to depend on your DTI, your financial situation, et cetera, et cetera, et cetera. This is for informational purposes, but I want you to think outside the box. I want you working with a professional that has your best interest, has been doing this a long time, can anticipate changes in interest rates rapidly, and how's you prepared to make those best decisions. All right, y'all, short-term refinancing, another great term and something you need to consider as we're in this rate reduction environment to make sure you're making the best financial decisions for the largest asset you are more than likely ever gonna own. Have a great day. I'll be coming to you soon with another tip and another way to help you strategically make those wonderful decisions. Take care, y'all. Make sure you hit that subscription button so you never miss a beat. Cheers.